Welcome everyone to a new video of ATFX. My name is Gonzalo Canete and I'm here with you to share the last update on JPMorgan numbers, projections, estimations, past results, all to face the new coming results presented on 13th of October, Friday, of JPMorgan. At the end of the video, of course, I'm gonna share with you a nice chart with the main prices, main levels that we have to keep on eyes for the coming results. So now, time to share the screen and time to share with you a few data. Let's start this overview of bank current status and future outlook. Yield and growth. JPMorgan has yield in 2023 that is 10 to 13% above Bank of America, Citigroup, and Wells Fargo. Not only that, but also I was checking the numbers by Seeking Alpha website. If you check the revenue growth, is 12.14% in the case of JPMorgan, and that's it's above the sector median, which is 7.36. It's almost the double, right? 65%. Increase on the revenue growth above the average on the industry. Now, additionally, its growth is almost double the sector average. Yes, well, 65% on the average. If the average is 70.36%, we got 12.14 in the case of JPMorgan. So the first numbers we're reviewing are good. It means like we are actually seeing that it's doing really well compared with the other competitors. Let's keep moving and see if everything is in the same line. Now I would like to talk about the context, because this is very interesting. The increase of the interest rates by the Federal Reserve. The last was done by Jerome Powell during the last speech. It's actually giving to us the impression that, well, to us and to them, mainly all investing bankings in US, the impression that the interest rate is gonna remain high for long term. They literally say, Federal Reserve mentioned during the last conference, that by the end of 2024 they still expect that inflation will be above 2%, so we are not gonna reach that target in long term, and also the interest rate is gonna keep about 5.1%, which means about 5% as a reference, and therefore not just JPMorgan, all the investment banks in Wall Street are adjusting, optimizing the portfolio, considering these last statements from the Federal Reserve. Now, net interest margin increase. Almost half of the profits come from interest on loans. When we talk about net interest margin, we talk about the difference between the interest rates they are paying on deposits to those investors who hold deposits on JPMorgan, and the interest rate they take from the loans, from the clients. They got it, the ones who are giving the loan. So between the interest rate they pay and the interest rate they generating, there is a gap, a margin, which is what we call net interest margin. Now that margin is getting increased. In almost all the banks are doing the same thing, increasing the commissions, increasing the fees, and also increasing the interest rate on the loans, and pay the minimum they can on the deposit. JPMorgan has benefit from rising interest rates, increasing its net interest margin. The first chart I took from 6 Alpha was interest income rising with interest hikes. You can see that clearly. The last year we have been facing one of the most aggressive monetary policies in the last 20 years. I will say more than 20 years, because if we consider the last time we were increasing interest rates, it was never be in that sharply charts rising that fast, the interest rate. Federal Reserve was always increasing the interest rates in a softly mode, step by step, taking few months between one rise to another, and see how the economy was reacting and so on. I guess this is a kind of moment when Federal Reserve was getting in panic after seeing the inflation rates almost at 10% in US, which is obviously a really big hit and impact on the economy. So clearly the increase of the interest rates as a reference has a benefit effect, a kind of boost effect on the incomes of the investment banking, and this is the case on the JPMorgan. As you can see, they are passing from March 2022 25 billions per quarter to getting like almost the double by the last quarter in 2023. Moving forward, let's take a look also on EPS, earnings per share. It's a review upwards several times this year. We can see that this number here, the green triangle with the number 10, it shows us that at least 10 times has been reviewed upwards the predictions, the estimations. We have to also mention that the previous one, the Q2, was 14th of July, was given $4.75 per share, and now is dropping to 3.97, the estimation. The EPS expected by this quarter is 3.97 per share. Also, the profits, the revenue, actual revenue, it's 41.31 billions expected in Q3. Given in Q2, and the expected one is dropping again to 39.38 billions. So again, dropping in the earnings per share, dropping on the revenue generated based on the estimations. Let's see if after all that estimations are actually in line with the results. Earnings per share, we can also see that has been dropping the last few years. From 2022 to 2023, we actually experienced an increase on the annual EPS, on the annual earnings per share, on the annual dividends, a growth of 33.05, which is which could be reading as a positive thing, but if you take a look what happens in 2021, we will see that actually we are trying to recover the dividends that they were given before. So actually it was a drop on 2022, and what JPMorgan is doing is paying back part of the earnings that they didn't give in 2022, as you can see on the chart. So it means like we were in 2021, we were around $15 per share. Right now they are giving $16.09 per share, so just slightly tiny increase on those results. Net income. What is the key to success for JPMorgan? What was the strategy? We have analyzed in another video Citi. We have seen what Citigroup was doing. Now let's take a look what JPMorgan has been doing so far. What we can check what we know. They increased the leverage on mainly the assets they got it. They increased also the loans and their commissions on those loans. They increase also they increase the interest given on those deposits, the remuneration, but they also increase the interest on the loans, as I mentioned before. So less than the revenues to the risk rise of benchmark rates. The interest on incomes is 18% above initial targets. So they're doing better than expected, even for themselves. The estimations were like generally less, but thanks to that boost of the interest rate hikes, they are facing a better number. So net income should be around $14.17 billion, and we see that clearly is rising. The net income has been rising since the last few months, really well. So we could expect that this number is gonna keep moving in that direction, gonna keep moving forward, and therefore we can be optimistic in this sense. Optimizing the balance sheet, something that Citibank was doing too. JPMorgan has 45% of its deposit interest-bearing deposits, compared with 57% of Citigroup, 36% from Bank of America, and 32.3% of Wells Fargo. And translated to numbers, this means like translate to reality. This means like the interest they pay on deposits in the case of JPMorgan is 45%. So it's better than Citigroup, but it's worse than Bank of America and worse than Wells Fargo. However, the margin interest they are generating between those loans they are getting interest from and those deposits they are giving interest on, it's better in the case of JPMorgan. During the Q2, during the results of the last quarter, they had a balance sheet of with a 2.62 of the interest margin, comparing with 2.06 on Citi and 2.48 on Bank of America, only behind Wells Fargo with a 0.09%. So it was the second bank after Wells Fargo increasing to that level the interest margin. JPMorgan is also trying to optimize its balance sheet to get more out of high interest rates in long term. This means they are acquiring long-term assets, long-term debt assets, just to get this bonus of this effect of the interest rates for the future. And finally, the chart. I'm gonna just share the whole screen so you can see the good levels. But as you can see, the chart is showing to us clearly since 2020 a clean and clear uptrend. We recently have broken the pre-pandemic levels. So we were about to $21 per share, but also broken up the $24.50 per share, which is the next resistance that it was facing closely. I believe this is uptrend that is probably testing the top of the range in the coming months, because we are watching right now weekly candles. So that means like if you are considering to buy JPMorgan to hold on your portfolio, eventually we could talk about $29.50, $30 per share, which will be amazing, and which is clearly the next resistance on its way. So if we consider this uptrend, it's gonna continue. First of all, we're close to clean and clear supports in the area of $23.50, $23 per share, with a target around $29.50 to $30. Current price is $24.50 per share. Not too bad. I mean, the risk-reward ratio is super good right now. We're gonna risk like $1.50 to $2 per share in order to gain like $5 per share. Really good profit factor. I believe it's good stock to keep on your portfolio. And that's all from my side. And just to hope you enjoy this report. I also hope it's useful. And guys, if you got any questions you would like to raise or to share with me, please send me an email. Please leave a comment on the video. Click a like if you like it. Subscribe to the channel, because I'm gonna be here doing more reports, more numbers, more research, just to help you on your investments. Okay, take care and good luck with the market. Bye bye.